Welcome to today's program, Dental School Loan Office Hours, brought to you by ASDA's Career Compass and sponsored by CommonBond. I am Lillian Smothers, ASDA's Director of Membership. Before we begin, note that all attendees are muted to reduce background noise during the program. On the right side of your screen, you will see a control panel. You will be able to submit questions for the presenter during the program by typing into the question box at any time. At the end of the presentation, we will answer as many questions as we can. In addition, the contact information of the presenter will be provided at the conclusion of the webinar. Should we not get to your question, or if you find you have a question after today's presentation, please reach out to the presenter directly. Career Compass is ASDA's online career tool to help prepare you for graduation. Find information to help you transition from dental student to practicing dentist or to resident. ASDA is excited to work with experts in the field, such as CommonBond, to develop new programs and resources for you. Visit Career Compass to explore all it has to offer. I would now like to introduce today's speaker, Keith Babbage, CommonBond's Director of Campus Relations and Financial Aid. Keith has more than 20 years of experience in the financial aid and student finance sector. His efforts have been focused on helping students access educational opportunities. Prior to joining CommonBond, Keith was Associate Vice President, Financial Aid at Berkeley College, where he was responsible for supervising all aspects of financial aid processing and Title IX compliance at multiple locations. Welcome, Keith.
Thank you, Lillian. I appreciate that introduction. Really excited to be here. We've been on a path over the last several months of having a really great opportunity to speak with very many ASDA members, really across the country. We've been on campus for a variety of events, vendor fairs, lunch and learns, and then we've done several of these webinars as well. And during that time, I would say, having talked directly with over 1,000 dental students, we've really gotten to know the population really well, listened to a lot of thoughtfulness related to borrowing, the large debt amounts that students have to take on. I've listened to the burdens and I understand that deep level of concern. And so we've really developed this expertise, I think, around what dental students want and what they need. And that ties in pretty closely with the loan option that CommonBond built after speaking with dental students and speaking with financial aid officers and directors of financial aid at dental schools. We think we've nailed it and we've got a really nice product. The product has been open and available for students over the last month. Students have been coming in, applying, getting approved, and saving really a lot of money over the federal loan options for sure. So we have a couple of slides here, and I thought it might be a good opportunity to review some of the basics of what the CommonBond dental student loan product looks like, where the interest rates are, what the benefits are, and then really look at a side-by-side comparison between our product and the federal product to see which one is more appealing to students. Our perspective at CommonBond, since we were founded about 8 years ago, has always been to deliver the best product to students that really meets their needs. And our goal is to turn a student into a customer only when and if the loan options that we make available are better suited for them than the alternatives, which would be the federal Graduate Plus. So we only want to give the best advice to students and provide what makes the best sense for them, right? So you know, just to start, I would like to really thank ASDA for their support in working with us and highlighting to us the concerns of ASDA members. And ASDA has been a great source of information and a great provider of data illustrating that dental students want and need and deserve better loan options. So against the backdrop of student debt for dentists being too high at interest rates that are too high as well, we're able to attack the problem from the perspective of building a loan program that offers lower interest rates to dental students, and that's what we've done for sure. So just a quick slide. I think a lot of you have seen this or have heard about the trials and tribulations of a dentist who was a dental student that borrowed $1 million in student loans. His name is Mike Maru. Pretty high profile. I think this was illustrated in Forbes and then some trade publications for dentists and dental students as well. Our advice is not to be like Mike, to avoid borrowing more than you need. He's a specialist for sure that helped him to accumulate some debt as well. But even with Mike Maru as the outlier, we know that dentists have the highest debt of any other profession. It's out there. The average student debt is $285,000 across all schools. That's sort of national. But when you break it down between public and privates, there's a fairly strong difference there, with private schools borrowing significantly more loan debt for sure. And you can see the difference here is about $250,000 at public and private about $326,000. And what we've seen here for sure is that when you take a look at the top tier relative to expense, if you look at the top most expensive schools, they're exceeding these limits, rather these averages, by 15 or 20 or in some cases even 30%, with debt pushing up to about $400,000 would not be unusual. And I think on this the slide on the right, debt at graduation, what's pretty remarkable here is we've got 40% of the graduating class borrowing more than $300,000. And I think that's really, really very, very telling. Right. So in coming to know dentists a little bit better and understanding where they are in their life and where they are relative to those future financial goals, we know that borrowing for dental school is just one, I'll call it maybe a hurdle. I don't want to say it's an obstacle, because dental students are extremely focused on achieving their goal, which is to become a dentist. And we've encountered very many people that will almost do anything or borrow any amount of money in order to achieve their goal. And I think that's admirable for sure. But it's only one piece. We know that in the future, some top personal goals might be getting married, certainly establishing a practice or purchasing a practice, and then that home mortgage as well. So the goal really here is just to encourage you to think about your financial situation holistically, and not to make any individual decision as though it existed within a silo, without the fact of considering your future debt. So toward that end, it becomes pretty easy to advise you to save as much money as you can now in the borrowing that you're taking on, because it will certainly help with the additional items that you'll be borrowing for in the near future, right? So there are options. Dental students do have options. One of the interesting things that we've seen as we've traveled the country and spoke and had the opportunity to talk with a lot of students is that I've had students say, hey, I didn't know I had a choice. I just didn't realize it. I thought that we paid for dental school, or could only pay for dental school, with our federal loan options. Those would be your direct unsubsidized Stafford loan and then the Graduate Plus loan. And the reaction often is, nobody told me I had a choice, or how would I have known about this? And the reality is there have been choices historically up to this point. They did not necessarily have the same great pricing that the CommonBond dental school loan actually does have. So we need to first impress upon you that there are choices, right? You can go with the federal options. We'll talk about the interest rates, or you can choose to finance with a private student loan. It's not an uncommon choice. We've had hundreds of students apply, and we've of course have worked with thousands upon thousands of students in other disciplines over years, delivering really low-cost loan options to them. And we've been refinancing student loans for dental students for many, many years now, making loans to dentists, helping them to get lower interest rates than they actually received while they were in dental school with those higher rate federal student loans. Okay, so I want to show you the interest rates, and I'm going to point out to you that these rates are effective July 1st of 2019, which means that they are the newest rates that are available. And you'll see that they actually decrease. Now, this is good news for students. This is the first year really in a 4-year cycle where rates have dropped. Typically, interest rates on the federal products have been ramping up. We actually saw a slight downturn on the rates this year. On the federal side, interest rates went from 6.6% fixed rate down to 6.08%. And generally, the unsubsidized loan program, that's the first $40,500 that dental students will borrow. And it generally makes up the foundation or the basis of most student loan portfolios, right? It carries just over a 1% fee with a cumulative maximum of $224,000. But many students will hit up against that maximum. And realistically, a dental student, whether you're a public or a private student, unless you're self-funding or family funding, you certainly need more than $40,500, right? The next loan program that students generally borrow from, what we've seen, is the Graduate Plus loan. The Graduate Plus loan for this year, the 18-19 academic year, the interest rate 7.6% is actually dropping to 7.08%. Again, a nice little drop there, but the fees on that loan program are 4.28, quite high. That loan program allows you to borrow up to the full cost of attendance, or your COA, your cost of attendance, which is generally printed on your award letter. So the reality is these interest rates are still, on the Graduate Plus, are still higher than we would like them to be, higher than most students would like them to be, but they've come down a little bit year over year, and that is good news for students nationally. So a couple things, when we look at building a loan program that's really highly customized, we need to get to know that group. We need to understand their success, their motivations, their inspiration, and then the realities of their performance. And when we dig into that information, it really allows us to begin to customize, highly customize a program. And if things look good, we can deliver real interest rate savings. So I want to share with you what we've uncovered. I think you know this, but it's sort of the background of how we're able to deliver a really solid interest rate to dental students and save money over the federal options. What we see is that 97% of incoming dental students will actually graduate. 97% pulling through is the highest of any discipline, in fact. We know that 99% of graduating dental students actually become employed in the field of dentistry, again, amongst the highest of any discipline. And then we also know that starting salaries for dentists can round about 180, 170, 160, somewhere in that category. So all of this means that we're able to deliver a really solid program because it's customized to a conservative, successful, focused group of students. And that means the program that you receive will look very different from the program that the federal government offers, because the federal government program is truly a one-size-fits-all program, which means that the dental student gets exactly the same interest rate as the social work student or as the student studying for a master's degree in education or theology, all great areas of academic interest to study, but the outcomes are different, right? And that's really the goal here, is to tailor a program that really speaks well to the outcomes that dentists have. Okay, so CommonBond has been doing exactly this type of thing for a number of years. And we were founded by a student at the University of Pennsylvania, the Wharton School of Business, who borrowed to fund his education at Wharton and came through the process thinking there is a better way to save students money on their student loans, to create customized programs, and to be more transparent, honest, and trustworthy throughout the process, leveraging the technology that we have available just to deliver a cleaner, crisper, better experience and a cheaper experience. And that is the effort and the emphasis that we placed into building the student loan program after being successful in doing it with the MBA population at the top MBA programs nationally, and then also graduate and undergraduate students nationally. So our goal is to help dental students tackle student debt by offering lower interest rate loans. It's a good time to show you these interest rates for sure, because you can see how these will contrast with the federal rates. Federal rate, one size fits all, single fixed rate of 7.08%. What you're going to see with our program, there's some variation based on an individual's FICO score. Our private loan does not look for an income. We understand you're a dental student. We know you don't have an income. Our CommonBond dental student loan program does not look for a cosigner. We understand that you are professional students. You'll be professionals in a few years, and you don't want to bring a cosigner into the mix. We don't look for those things. We are looking for a FICO check, and the higher your FICO score, the better you'll score in our loan program, potentially bringing in a fixed rate loan as low as 5.56%. And right there, you can see that we're saving you about 1.5% in that category from the federal graduate plus loan. And depending on where you score, though, you're guaranteed. Our maximum rate is 6.76% on our fixed rate product. You're guaranteed to save significantly over the interest rate that the federal government offers. We're talking, even at our highest rate, you're saving 40 basis points, which is 0.4%, which is really, really very significant in terms of your savings potential over the life of your loan. If you choose a variable rate product, you can see the rates there as well. They're also very competitive. We tend to see most dental students being comfortable with a fixed rate loan because it locks their rate in and makes your payment a little bit more predictable over time. So we expect the fixed rate product to be a little bit more popular here. And that's really what we see across the board with all of our different student loan products. Even with MBA students, fixed rate's the most popular option, right? So here I'm showing you if you were to borrow a $60,000 loan with the federal, instead of the federal government with CommonBond, $60,000 would deliver a savings of $8,931, right? So understanding that basis points really, really matter. One year borrowing, which would be about $60,000, the logic being $60,000 in a private loan plus your Stafford of $40,000 gives you about $100,000. That kind of gets you near where the cost of attendance would be at a public school. Private's borrowing a lot more for sure, but I just want to show you this projection that with a $60,000 loan, you can save up to $9,000. That just increases significantly the more you borrow and the more years that you actually choose to borrow with CommonBond instead of the federal grad plus loan. Now, depending on the interest rate that you receive with us, some students may actually make a choice not just to replace their graduate plus loan with a CommonBond private loan, but potentially I've had questions about, can I replace my Stafford loan with a CommonBond private loan? And the answer there is yes, but keep in mind that the Stafford loan interest rate is just over almost 6.1%. So we really want to take a look closely at your interest rates that you've been offered through our loan program and make sure you're getting the best deal possible, because it's really about saving the most amount that you can, and there's a way to build your loan package accordingly, right? Okay, so I do want to spend a moment talking about the protections that you have available through our loan program, and then the benefits, right? So guaranteed that the CommonBond private loan is cheaper than the Graduate Plus loan, could be cheaper than the federal Stafford loan. We offer complete independence, which most people don't think they'll have with a private loan. We're not looking for income, and we're not asking for a cosigner there as well. And then we have flexible repayment schedules as well, with 10, 15, 20-year repayment schedules. We have forbearances built into this loan. No payment required while you're in school. Certainly makes sense. You're a student. You're not able to make payments while you're in school, so we don't expect that. We give you a 6-month grace period after graduation before you need to begin repaying on this loan, very similar to the federal student loans. And if you choose to go into a residency, we offer a full deferment during residency as well. No payments required during residency. If you're thinking that you're going to return to school for a specialization at some point, we'll offer you a full deferment on that loan during your specialization period as well, if you choose to partake in that. A popular question that we get very often is, what about death and disability forgiveness? Those protections, which are offered over at the federal program, are also offered in the CommonBond private loan program as well. So in the case of death and or disability, the loan will be forgiven and will not pass along to your estate in the case of death, and in disability will be completely forgiven as well. So those are, we get a lot of questions like that, and it's important to know that you're protected when you're borrowing with the CommonBond private loan for sure. Okay, I just want to point out that CommonBond has a social promise, and essentially every student loan that is originated, we actually fund the education of a student in the developing world. Our program has been in Ghana. We're closing in on $2 million in donated funds. We build schools, hire teachers to help send kids to school. And our social promise, really, it's the only one-for-one social promise in the world of finance. It's something that we're really very proud of. It's a big part of the reason that our employees at CommonBond come to work at CommonBond, because we intend to do good by doing well. And I'm really proud of that personally. It's a big part of what makes me happy about working at CommonBond, for sure. And we often find that our student borrowers are very comfortable knowing that they've helped to fund the education of a child in need in the developing world. So I just wanted to also cover just one other point. As I mentioned, the application is open. It's available at commonbond.co. It's really just a 5-minute application process. It moves really quickly because we don't ask for income data, nor do we ask for cosigner information. The best way to know how much you can save would be to jump into an application, go through the process, and see what your offered interest rates are. And then we can calculate what your savings actually will be. We have relationships with financial aid offices at all 66 dental schools. We know how they prefer to receive information for a student that's going to be funding their education through CommonBond. So we send file information out to them, essentially saying, hey, here's a student. We give them your name, we give them the amount that you've applied for, and let them know that the loan is ready and available for them to certify. Electronically, they send the data to us. There's nothing that you need to do other than complete your application and see how much you can save. We then pick up the ball and reach out to your financial aid office and do everything on that side of the house. And again, we've got existing relationships, so the process is pretty easy at that point. So I think I've covered a bunch of information. I'm sure I've left some stuff out, but I want to open it up for questions. So I want to ask the attendees any questions that you might have to go ahead and submit them, be happy to answer.
Wonderful. So as Keith mentioned, we'll open the program up for questions. We'll do our best to answer as many as we can. If for some reason we are unable to get to your question, Keith's information will be at the end of the presentation. And to start the ball rolling, Keith, we have a question of how can I increase my FICO score?
Good. I love the thinking because this isn't just an issue that pertains to student loans, right? But this is really a life challenge because your FICO score will impact you really future forward in every major financial decision and minor financial decision that you make. So the best initial advice to give is to get a handle on your FICO score and understand it. Understand what specifically is contributing to your FICO score. And the way the question is asked, I generally make a presumption that there's a FICO score that's lower than we would like it to be. And very often there are errors that erroneously contribute to a lower FICO score than it should be. So the goal initially would be to get a hold of your credit report, take a look at your Fair Isaac score, and then understand, first of all, make sure that the information in the credit report is accurate. And if you see information that's inaccurate, the credit bureaus actually have to work very closely with you to try and correct that information. Many people have incorrect information that will deflate their score, and just by correcting that erroneous information, they can actually increase it as well. It's not uncommon that students have moved maybe several times within their undergraduate education, particularly if you lived off campus. Sometimes there are utility bills. There are things out there that you truly don't know are out there and in arrears and tied to your name. So by taking a look there, you can easily see if there are some debts that are lingering out there that you can extinguish. You would know certainly if there's big ticket items for sure, but there may be some little niggling things that are hanging around out there that you can help to extinguish to boost your score up for sure. Then the next one is also to evaluate if there's any instance of fraud, which is another really important reason to take a look at your credit history. Okay, so those are a couple of like kind of quick hit points. There are other things that you can do that are a little bit more nuanced. For instance, making sure that you're not utilizing an abundance of your available credit. I'll give you an example. You might have a credit card, for instance, that has a limit of $3,000, and you're comfortable with that because you don't want really high limits, for instance, but you are a person that transacts your financial life on your credit card. And as a result, maybe you're running charges of $2,000, $2,500 per month. You may pay it off at the end of the month, right? But you're using a large percentage, in that example, of 2/3 or 3/4 of your available credit. Well, that actually is not helpful, right? It would be better for you to have an account of, say, $10,000 and utilize $2,000, in which case it's only 20%. So the score is actually giving you credit for having more debt available, but underutilizing the debt that you have. And lenders, for instance, get excited about that because they say, well, here's someone that's responsible. They're only utilizing 20% of their available debt, and that actually will bring your score up a little bit more. There's a natural trend to increasing your credit score based on the length of time that you've had open credit lines. In this particular case, there's not much that you could do with it because, well, you have either had open credit lines for 3 or 4 or 5 years, or you haven't, right? Just keeping those lines open for longer periods of time will naturally cause an inflation in your credit score. The other point that I would say, and it's not uncommon that a person holds on to one of their early revolving accounts like a credit card, and that length of credit history with a particular vendor will also increase your credit score. So hold on to some of your older accounts. Lenders like to see that and boost your credit score because it basically shows here's an individual that has had a relationship with a Discover credit card or maybe a Citigroup credit card for 5 years or 6 years or 7 years. And again, that length of relationship speaks well, right? So I've covered a bunch of stuff. There's still more that you can do. There's a real science to it, but those are some of the quick hits.
Great, thank you, Keith. Another question. I have debt from undergraduate studies. How does this affect my ability to take out a loan through CommonBond, for example?
Yeah, so that's a great question. And again, you know, I'm excited to see people thinking sort of big picture. No decision that you make today exists in a vacuum. You think about your past debt, your future borrowing, your prior student loans, and I'll make a presumption that they're direct loans, but they could be other, you know, FFELP loans or other private loans, don't necessarily impact your ability to borrow a CommonBond student loan. Because our loan product actually has an aggregate limit of $500,000. It's a lot of money. Our goal in building the program was to make sure that students didn't run out of available funds, for sure. So our aggregate limit does not take prior borrowing into account either. So our $500,000 is CommonBond borrowed private loans. $500,000 is your limit. So that other borrowing doesn't impact your ability to borrow with us. That being said, really the energy here is, okay, I have an amount that I need to borrow to cover the costs that I'm facing in this next academic year. The best advice is to borrow the lowest price loan that you can find, right? Save as much money as you can as quickly as possible. There's going to be a little bit of strategy here because it's very clear that if you've had undergraduate loans, you borrowed with the federal government before, you probably borrowed with the federal government last year. If you're a D1, if you're a D2 or D3, you borrowed for several years, that's fine too. Our loan program is a great plug-in wherever you are at this point. It's never a good practice to say, hey, I borrowed with the government before, I've already subjected myself to higher interest rates, why don't I just move through at those higher rates? The goal is if you can get a lower rate loan and begin saving money immediately, you're going to do it, and you should do it as quickly as possible. But there is a strategy that you'll employ because it's very clear that you've borrowed with the federal government and now you're going to have a CommonBond student loan. One of the things that you may consider in the future is an opportunity to bring the debt together through a product called student loan refinancing. Student loan refinancing is available through CommonBond. We're one of the major providers of refinancing loans, and we've been refinancing loans to dental students for many years, and we've gotten to know dentists in that format, and we're excited about doing refinance loans for dentists because of incomes, because of conservative natures, high FICO, great performance for sure. Right.
Great. And thinking about loans, do you recommend paying down school loans first before taking out like a loan for a mortgage?
Great. So really good question. So generally, our advice is work to repay your student loans assertively. And I specifically don't use the word aggressively, but I do want to say assertively, which is to say that when we've talked to dental students, they tell me they don't intend to be repaying their student loans 20 years from now or 25 years from now. The way they're building or the way they see their personal practice and wealth accumulation, extinguishing the debt will happen quicker than the longest repayment plan would indicate, right? So there's going to be some acceleration, and people say, yeah, you know, I want to take care of this pretty quickly. But dental students, being conservative in general, speak to it in a very gentle way and say, yeah, I intend to take care of it, but a little bit concerned about this other stuff that I'll need to handle. So the good news is everybody knows that a dentist is going to have significant student loan debt, right? Everybody knows that. And that means that your student loan debt will not impact your ability to get a mortgage, will not eliminate the possibility of getting a mortgage, nor will it eliminate the possibility of getting a practice loan. It just won't, because student loan debt, if you're a dentist, you've got the debt. The partners that you'll be working with for a home mortgage, the partners you'll be working with for a practice loan, they expect you to have debt. They will work to compartmentalize that debt. It becomes a factor, but it's a small factor, and they expect to see it. So it will not eliminate your ability to access these other financial products. I don't see, practically speaking, a young dentist working exclusively to extinguish or eradicate their student loan debt before purchasing a home. Just don't really see that happening. And certainly not working to eradicate the debt before considering a practice loan. And there are some other factors that will work into that. We don't provide practice loans. It's not an area of expertise by any means. But when you're working with the providers for practice loans, they score and they look at a young dentist differently than they do a dentist that has been in practice for some length of time. So ask these questions, certainly with those providers, but they're going to look at you. They expect to see student loan debt. So if you've got $300,000 in student loan debt at the point that you're looking for a practice loan, they expect it, they know it. If you're a young dentist early on, they don't expect you to have a high amount of cash savings for sure at that point. Just makes sense. It's in the profile. There's no risk associated with a young dentist with high student loan debt. Dental practices are successful, right? However, if you're a dentist that's been practicing for some length of time and you've been focusing on paying down your student debt, you don't have cash savings, but you don't have that student loan debt as well, you look a little different than the prototypical person that's taking a practice loan. Because my point is that there are different ways, different manners to be reviewed. But I don't think advising you to focus on paying down your debt before you get a mortgage, before you get a practice loan, is really the best advice. My advice to you is work and continue to pay down your student debt. So you're making your payments on your student loan for sure, and you'll take a mortgage that works well for you based on your whole portfolio. And the mortgage is going to be contingent on what your plans are relative to taking a practice loan. So if you think that in a few short years post-graduation, you'll be investing in a practice, you may really want to consider purchasing that $1 million home, or regionally $1 million doesn't buy you a lot of money depending on where you are, but you're going to want to make that choice based upon what your intention is relative to buying into practice.
Thank you. Is prepayment allowed with CommonBond loans, and are there penalties for doing so?
Yeah, great. Thank you for that question. I really appreciate it. No prepayment penalties. We expect there to be some acceleration on payment, and students can do that at any point in time, sending an extra payment per month, sending in more with their monthly payment, doing a lump sum payoff. There's no penalty at all in any shape on the CommonBond student loan.
Wonderful. So this is from a member who's a pre-dental student. Financial aid offices have not given information about private loans except they're going through FAFSA. So I understand these are different things, but as a pre-dental student, should I contact the financial aid office before applying for FAFSA? And so I can consider CommonBond as a potential choice.
Best advice is always complete your FAFSA, right? Whether you're an undergraduate student or a graduate student. As pre-dental in the undergraduate space, it becomes even more important. But I understand the question is about what to do in graduate school. But I want you to complete the FAFSA. It's always the best step. And it also notifies the financial aid office of your application and sort of your intention to receive financial aid, which may be in the form of student loans, but definitely complete FAFSA, right? And then having completed the FAFSA, the financial aid office creates an award letter that they send to you. And the award letter positions your cost of attendance. And you'll see your cost of attendance is made up of different data elements. It's tuition, it's housing if you're using it. It's also non-direct expenses. Those are expenses that you need to handle yourself, but these are expenses that every student encounters. So transportation, books, supplies, in some cases, are direct expenses. To mention travel, food, right? Room and board, even if you're not living in an on-campus environment, all go into your cost of attendance. The award letter that the financial aid office sends to you, really, it endeavors to cover all of those costs. And it really wants to deliver to you a full solution to those costs. And most schools will package up to the full cost. Some schools don't. If your cost of attendance is $130,000, you might find that you've got your Stafford loan for $40,000, and then the financial aid office has inserted a Graduate Plus loan in that particular case for another $90,000, giving you $130,000 in loans, really full coverage. Doesn't mean you have to take the full amount, but they're offering that to you. Now, in this particular case, financial aid offices will always go with Graduate Plus. In many cases, they don't talk to you about private student loans. They'll just give you that Graduate Plus loan, but they do recognize that many students can qualify for lower interest rate loans in the private market space. It just very often doesn't enter into the conversation that exists between a financial aid office and a dental student. So complete FAFSA first, and then go ahead and apply for a private loan product through CommonBond and see how much you can save. And at that point, if you wanted to notify the financial aid office that you intend to use a CommonBond loan, you can do that. Also know that we'll notify them of that same information once we have your application on file.
Thank you. So another question. My school's pointed me into the direction of Navient, N-A-V-I-E-N-T. Are you familiar with them, and how are they similar or different than CommonBond?
Sure. So Navient is an offshoot of Sallie Mae. I am familiar with that organization, but I want to, hopefully I can get a little bit of clarification, because Navient is a servicer on federal loans, right? So they were the servicing arm of Sallie Mae, and Sallie Mae would service federal loans. So when you see the name Navient, it's usually attached to your direct loans, which would be your direct unsubsidized loan or your Graduate Plus loan. And Navient is not the lender, but they're the servicer. It's easy to get that mixed up, because the communication that students receive on their federal loans, if it's being serviced by Navient, the communication indicates Navient. So it's easy to think, oh, this is Navient that's actually the lender, but Navient's actually the servicer. And what servicer means on the loan is they're the organization that reaches out to you, sends you mail, would make phone calls, gives you access to your data electronically via their web portal. And so when you say that they're sending you through Navient, it likely means that they're advising you to go with federal options, which kind of makes sense based on what we know financial aid offices to do really nationally. But it's your choice, right? And the financial aid office, if you ask, say, well, I would like to go with a private loan instead of the federal loans, they might They might have a preference for federal loans, and there are reasons for that. If you've got 400 students in your school and 400 students are borrowing, it becomes a little bit easier for the financial aid office to have 400 students borrowing through the same lender, as opposed to borrowing from multiple lenders or private entities. We do everything we can to make it as easy as possible for the financial aid office, and it really is not complicated. I can assure you, having worked in financial aid offices for many, many years, but sometimes it's the path of least resistance. And then using that term, the path of least resistance, it's actually very interesting because we find historically many dental students will simply borrow with the federal loans because it's the path of least resistance. It's the recommendation from the financial aid office. Even if it's not explicit, it's implicit in the award letter. And that's the way dental students go. 90% of the cases, dental students had borrowed with the federal loans. What's really very interesting is if you take a look at, I'll use MBA, the MBA population, is nearly a majority of MBA students are borrowing in the private marketplace because they realize they can save money. And if an MBA student can save 10 or 20 or 30 or 50 basis points on a private loan over a federal loan, they're going to do it. But this is how they live and they breathe, and they'll sort of pull together spreadsheets evaluating how much they can save depending on different repayment plans. I don't expect dental students to do that necessarily, but I say that because I think it's important to impress upon students that, if you're able to save 10, 20, 30, 40, 50 basis points, it's really compelling to do it and to do it immediately.
Great, thank you. So another question, I've talked to my advisor about my financial aid package and I've mentioned CommonBond and they didn't help me make that connection. What would you suggest if I'm interested in going with CommonBond and my financial aid officers aren't helping me with that?
Mm-hmm. So again, as I've said, financial aid offices are very predisposed to the federal options. It's just the case. We expect to see that changing and changing with some more frequency because students are going to drive that change. And as students are realizing and understanding that you can get better interest rates in the private market with CommonBond, that's just the reality. And we saw that, by the way, in financial aid offices at MBA schools, where they used to be very focused on federal programs for sure, but students just initiated that change where students went in and they said, no, not, we're going to save money here because we can, and that's what our choice is. And then gradually financial aid offices in that space became a little bit more friendly toward private loans. But friendliness from a financial aid office toward a private loan program or any individual private loan program, be it CommonBond or another one, is not the most important thing for an individual choice. Your goal in funding your education is to get the best priced loan products that you simply can, and not really work within a stubborn process that exists within the financial aid office. So the best step or the best next step is to apply through commonbond.co for that dental loan, see the rates that you can get, and based on the amount that you can save, that just becomes incredibly compelling. And the financial aid office has to accept the decision that you make in terms of how you're going to pay. They can't force your hand. They won't try to, for sure. They may try and discourage a choice. We've seen that, again, because there's such a dogma on having students borrow with the federal options. But what I would encourage you to do, for sure, is to complete that application and then reach out to us. You'll have my email contact, and I would encourage us to have a quick conversation. Once you've applied and you see what your interest rates are, we could speak a little bit more specifically about it. And if you're getting some direct opposition, we'll just make sure that we're able to help push that loan through at that financial aid office. I will say overwhelmingly our results, we've met with about 40 financial aid offices at the 66 dental schools. Very supportive, very encouraging. We've shared the details of the program with them. They've been really impressed in almost every case with the details of the program, indicating that it really meets the needs of students that they're seeing come through their office on a daily basis.
Wonderful. So a FAFSA question for you. Can a student be penalized for changing their housing situation without updating FAFSA or the financial aid office? So an example, living on campus versus off campus.
Mhm. So no penalty there necessarily. One question would be if that cost of attendance that predetermines the amount of loans that you can access is different based upon on-campus or off-campus housing. It very frequently is at the undergraduate level, for sure. It may or may not be at your dental school. And schools are given a lot of flexibility with the way they build cost of attendance. The Department of Education gives them some parameters. But the way the question is asked, my point would be, it might be that off-campus housing carries a different cost of attendance budget line than does on-campus housing. And if you're moving from a less expensive to a more expensive, then you are being penalized because technically you could access more loan funds by letting them know you're now in a higher cost environment. If it's the flip side where you're going from a higher budgeted item to a lower budgeted item, well, then you have a higher cost of attendance budget, meaning you have access to a greater amount of student loan options than you would otherwise. And the right advice for me to give would be to update that budget so it's correct and it reflects accurately. But there may not be a difference between the two, right?
So somewhat similarly, what happens when you borrow money and are awarded a scholarship at a later date? Can loans be adjusted when you have that additional award money?
Yes, absolutely. We realize that changes can happen. They can happen in great ways with additional scholarships or grant funds coming through. Unfortunately, we don't see enough of that happening for dental students. There's just not enough of those free monies being awarded throughout dental student financial aid award letters. But at any point in time, if you needed to make a reduction in that loan because a scholarship has come in, the financial aid office will accommodate that and send funds back to the lender that we'll use to credit back that portion of your student loan for sure. Yep.
Great, thank you. Another question. I'm thinking about applying and going into a residency. Is that process in getting financial aid similar to dental school, or is it different typically?
Yeah, so we see some differences in residency programs. You guys know that really better than I do. I'll just illustrate some of the differences that we've seen in residencies. We've seen paid residencies where a resident has the opportunity to actually earn, and we've seen unpaid residencies for sure. We've seen residencies that don't cost, and we've seen residencies that do cost. It sounds like embedded in that question is the expectation that this is a residency that has a tuition payable component to it. And if that is the case, then I think the question is asking, I may need funding to help cover the cost of residency. Lillian, am I interpreting it correctly, or do we think there's something different here?
That's my interpretation as well, yes.
Mm-hmm. Great. So if the residency is an academic component, part of your program, the question becomes, do you have the opportunity to borrow against it? And the answer is yes. If it's part of your academic program, you have the opportunity to borrow to help fund that program, and then the costs that you have in terms of cost of living expenses during that time as well, receive a refund to help cover your living costs.
Thank you. And then the last question we have, you mentioned that CommonBond does loans for MBA programs. Obviously, we've been talking about dental school loans. Are there other professional groups that CommonBond provides loans for?
Sure, absolutely. CommonBond, in terms of unique or specific loan programs, we have an MBA specialty loan. We have our dental loan. We have a loan for medical students as well, in addition to a graduate loan program that works very well for law students and many other health professions. And then we have an undergraduate loan program as well. So, a lot of products to cover a lot of students. I'm not sure if the question was curious because maybe there's another discipline that a family member needs, or if the question was just sort of to understand a little bit more about what CommonBond does and the breadth of our work with students. We also have refinancing loans as well, and we have CommonBond. I think this is sort of an interesting opportunity to point out the fact that CommonBond is a student loan company. It's what we do. It's really all that we do. We are not a one-size-fits-all financial services company, but we are a specialist in the student loan marketplace. If it's in-school loans for dentists, if it's refinancing loans that a dentist will need, we've got those options available. We also have a part of our company that is CommonBond for Business that helps business owners in their efforts to encourage responsible employee behavior, where businesses can participate and help to pay down student loan debt for their employees as well. Really a very specialty product, something that's become very popular, but again, fits very comfortably into the fact that CommonBond is a helping pay for education company.
Great, thank you so much, Keith. We would really like to thank you for participating in tonight's program. And again, this is Keith Babbage, Director of Campus Relations and Financial Aid at CommonBond. This program was recorded and it will be posted on ASDA's website and emailed to all participants. Thank you so much, Keith, and thank you all for joining us this evening.
Thank you so much. Take care.
Bye.
Bye-bye.